As today is June 10th, Monday, and I have a couple trades I wanted to cover really quickly because this Shopify trade we took today, I think there's a lot of things that we can learn from it. And when I kind of recapped it myself, there was a couple things, and so I want to talk about that really briefly here. So I was looking at longs over Friday high for Shopify, and we did get a nice first 5-minute impulsive candle. And then a little failed 1, 2, 3 on the 5-minute, but we never lower, right? So we just consolidated a bit, and I said to myself, okay, knowing this 5-minute was a spike high, I'm willing to take it prior to this break if we can get some type of setup back over the previous day high. So I did take the setup on either this candle here at 10:05 or this at 10:15. I believe it was this candle here at 10:15. We took the $62 calls for 114. And we were able to get like a 15% trim, not quite 20% trim at these highs here, but it was about 15%. And I said to myself, okay, I'm going to put my stop at break even, right? So I put my stop at break even. We actually did come down, and we, on these lows right here, did tag my break even stop before eventually going pretty much straight up to our target right here and actually cracking through this level here with pretty much little stress, right? So normally if we get a big rejection, we'll consider closing the trade, right? But in this scenario, there was really no rejection. It was straight through. So we hypothetically could have held our runners to our second target, which was up towards this 63.5, 63.6 area, which was the weekly 8 EMA, right? We did tag that right here before rejecting later in the day. So we basically hit our target 1 and target 2 all within one day. Looking at this daily candle, really wide daily candle, right? So now we got to ask ourselves, what can we do better, right? What can we do better? I psyched myself a little bit out today because I didn't expect too much movement from the indices in general, which we got a decent move actually, right? I just figured before FOMC, it's possible we just chop a bit. And we ended up making a decent move and then got some volatility later in the day because of Apple. But two things that I could have done differently here. One, give the chart a little bit of room to breathe, right? My idea today is I wanted to kind of lock in the profits on the day, but we really didn't have too much, right? So for me, giving it a little bit more wiggle room, even like to a minus 5%, I would have still netted 10% overall in this trade and would have been able to stay in the trade, right? That's one thing. Number two, I said, even in the chat, that this candle right here could have provided another re-entry point, which as you can see, was basically this risk to reward thing right here that I drew. Sure enough, this worked as well. So you can learn two things. One, give the room a little bit more room to breathe, even if it means you're giving back a tiny bit of profit, right? We're not going to go from a green trade to a break even to a red here. We'll go from a green trade to a slightly not as green, but still green trade, right? And let's just say hypothetically we did get stopped at break even because the trade ended up failing. Be a little bit more open-minded to those re-entries if they can, show themselves and prove themselves. The reality is, even if we took a stop here, it would have only been a 10% loss at max, right? So be a little bit more open-minded to the second entries personally, and hopefully you guys can learn from that as well. A couple other trades I took today that I just wanted to cover really quickly. One was an Uber. And so I took this trade as we had this gnarly spike down here because of news. And again, keep in mind, guys, that you trade the charts always, right? Unless the news is so catastrophic, you always trade the charts. Looking at this chart, all we did right here, right, is after a flip of the daily EMAs, we just went down and retested them. So I got entry around 66.5s or 66.6s. I took the $67 calls. My position size was about like a little over $1,000, and I was able to very, very, very quickly make about 30% gains on this spike back up. So I basically closed the position in full. It ended up doubling as it kind of went back up towards the 68 and even higher when it almost tagged 69s again. Those went about 1.5x there, almost a triple. But that's just a news trade where the probability at this point of the ADR continuing to dip, right, is very slim. Right, as you can see, these are like normal days, normal ADR, right? Even this is a bigger day because of earnings, but the normal days aren't too wide, right? 64, maybe $2 or so. At this point from the highs, we were already down over $3. So figuring to myself, I don't care what the news is here, right? This isn't like a gamble, right? And it's not even like a YOLO because it's all calculated, right? Obviously, it wasn't in my plan, but Uber in general was in my plan. right? So because of that, I knew where the daily EMAs were sitting, and so I said to myself, okay, if we can spike down to here, that 66.5 area, I'll be willing to take some longs. So I took the 67s, and we immediately got that spike back up, and I sold. Last trade, it was kind of the same idea, honestly, with Apple, right? So initially here, around this like 194 area, Apple spiked down pretty hard because of this conference it had. And so I took some calls after I saw this bottoming tail here. So I got in around this 194 area, knowing that this was the daily 8 EMA. So it's kind of the same exact deal as Uber. So I basically got in and I sold pretty much in full right here at 195. This was more of a quick scalp. I took this while I was like eating my lunch, I believe. And again, this wasn't any type of A plus swing setup. This was more just a reactionary scalp, banking on the ADR, and we actually did end up going lower by another like buck or so. But also that was because of the volatility given by the news conference. That's why it's also very important when it comes to these type of trades. Don't overstay your welcome. We saw on Uber that it did go higher and maintained higher, but here we went higher, failed to go higher, and then kind of went lower. So never overstay your welcome on these kind of trades, these bounce trades. Treat those as a scalp. Take what you can get, put your stops at break even, and ride. But overall, we have a couple positions that we are swinging overnight, and so I'll cover those in a later date. But for now, guys, hope you learned something from this recap, and I'll catch you guys next time. Peace.